This presentation is about the Report to Parliament, Results of Audit, Education Sector Entities, 2014. Each year, every Queensland public sector entity is subject to a financial audit. Our audits provide the users of financial statements with independent assurance that they are reliable and comply with prescribed requirements. The public sector has high standards of accountability in the probity and propriety of its activities. We design our audit procedures to address any risks associated with an entity's financial report. We are highly committed to helping the public sector improve. This report relates to education sector entities which have a financial year end of 31 December. There are 95 entities audited, including 7 public universities and their 73 controlled entities, 8 grammar schools and 7 other education agencies. Of these, 48 prepare financial statements upon which QAO provides an audit opinion. When this report was tabled in Parliament, 47 audit opinions had been issued, all unmodified. This means the statements have been prepared in accordance with Commonwealth and state legislative requirements and Australian accounting standards. 17 university-controlled entities were issued with an emphasis of matter paragraph, drawing attention to the fact the statements were prepared for a special purpose for limited users, rather than a general purpose for many users. Most entities need to have their financial statements audited within 2 months of the end of the financial year, either by legislation or, in the case of controlled entities, for consolidation purposes with the parent entity. All entities met this requirement, which is a good result. Overall, statement quality was high, with minimal changes required to account balances and note disclosures. 3 areas for improvement in the statement preparation process are: provide shell statements before balance date for audit review, preferably 31 October. Early agreement with audit committee around materiality thresholds, note disclosure and potential significant transactions, and better quality work papers and supporting schedules. The statutory financial results show most entities are operating effectively. Key financial ratios indicate all universities are in a sound position, all recording an operating surplus, and levels of debt remain manageable. They had sufficient funds to meet short-term debt and obligations. Figure A table is a summary of the key ratio results for the universities for 2014. It is noted that Central Queensland University has a high operating ratio as a result of reported surplus of approximately $150 million, mainly because it received plant and equipment to the value of $120 million at no cost with the merger of Central Queensland Institute of TAFE. 2014 is the second consecutive year of surplus for CQU after 3 years of deficits, which indicates that revised revenue and expenditure policies as well as structural changes are having a positive impact. Most grammar schools are in a sound financial position, with all recording an operating surplus for 2014, except for Ipswich Grammar School, which recorded a deficit of $1.1 million. Deficits have been reported for the past 7 years at Ipswich Grammar School. Deficits have been reducing for the past 2 years due to changes to revenue and expenditure policies and structural change, but continued effort is needed to ensure future sustainability. The control environment is integral to an entity's governance framework. Fewer significant control issues were identified in 2014 compared to 2013, but one area of concern is security and access to IT systems at both universities and grammar schools. Weak IT security and access controls allows for potential corruption of data, which leads to integrity and confidentiality issues. All universities have staff with annual leave balances over the maximum allowed. Excessive annual leave exposes universities to risks such as workplace health and safety workload problems and individuals' well-being, fraudulent activity where someone performs the same duty for a continuous length of time, and increased financial liability as wages increase. Effective controls have been implemented, including email reminders when staff are close to their limit. If staff fail to take leave when directed, then leave is automatically deducted, and regular reporting to executive management. The university's internal audit units and the audit committees are operating effectively, with one area considered for improvement. Sector-wide, there were 94 high and moderate risk internal audit issues unresolved, with 9 high-risk issues outstanding for over 12 months. The internal audit units and audit committees should action outstanding items in a timely manner. Good internal management financial reporting ensures the right people are getting the right information at the right time so they can make better decisions. All universities have a sound reporting framework and are producing basic information for all users. However, improvement opportunities include role clarity for preparers and users, annual feedback from users, assess training needs and implement training plans for users preparers, accrual reports for Council and Senate, integrate financial and non-financial information, include prospective future information and targeted analysis, clearer and more concise reports, most up-to-date information in a timely fashion, reduce manual input and use data warehouse systems, real-time access to reports, and tools for users to access and analyse data online in real time. While we certify to a statutory result in the financial statements, which accords with relevant legislative requirements, universities perform separate calculations for internal reporting and daily business operation purposes. This separate calculation is termed an underlying or normalised result. 4 universities currently report this underlying result in their annual report, and some reconcile this result to the statutory result for users to understand the difference. We observed adjustments made across the sector are not consistent and university specific, which makes it difficult for users to get a common understanding of the underlying result. Universities should develop a common framework around the calculation of this underlying result to assist users of the annual report and internal management reports. Overall, a good result for the education sector, with some improvements recommended. I trust this presentation has been of value. The full report can be found on the Queensland Audit Office's website. Thank you.